Hello traders, and welcome to another video review. Today is Wednesday, December 15th of 2021. Let's take a look at the Forex calendar because it looks like we are going to have a quite busy day today. Some data had been released already overnight. Mostly there were data from China, like fixed asset investment and industrial production. As you can see, some of them had beat the expectations, some of them didn't. The thing is that the unemployment rate is increasing to 5%, and the industrial production is in line with the expectation of 3.8%. The rest of this data has disappointed the market participants. The consumer price index data scheduled for release at 9 o'clock from the UK are expected at the level of 0.4%, which is way worse than the last time level of 1.1%. Plenty of other data is going to be released from the UK as well at 9 o'clock. During the London session, that's about it. If we are talking about the important data, basically, but the London session is not everything. We still have the New York session, and the New York session is very interesting. We have the consumer price index together with the common, median and trimmed core. CPI data from Canada scheduled for release 3:30. So please keep an eye on this data as well, because the market expects 0.2% decrease from 0.7% in the consumer price index in Canada. And later on at 9 o'clock p.m. we have the FOMC interest rate decision statement, economic projections and press conference. So key data for today: the FOMC rate decision is expected to be released at 9 p.m. in form of the short information about whether the 0.25% is the level to stay with us for quite some time, or maybe there was some sort of the change. As you can see, market participants expect the FOMC to leave the interest rate at the level of 0.25%. And at the very end of the day, in quarter to midnight, we got the GDP data from New Zealand for the third quarter. So plenty of data today scheduled for release. Let's take a look what is really important here on the chart. We are going to start with the US dollar index. What is US dollar index doing ahead of the FOMC interest rate decision? We have a breakout. We have a breakout above the upper line of this triangle here. As you can see, the recent high was almost at the level of 96.61, which is the technical resistance. The recent high was 96.56. So there's only 5 pips, miss of the test of the technical resistance, but the breakout to the upside is still in line with the regular expectations that are saying that this is a continuation pattern on the US dollar index, and we should see another rally to the upside soon, because as you can see, we can consider this pattern as a triangle, for example, or as a pennant. Yeah, this is the pole of the pennant, this is the pennant itself. So breakout to the upside is the pattern continuation cycle, and then we can expect 96.61 and 96.90. So please keep an eye on the US dollar index. Of course, if there is an interest rate hike during today's meeting to, for example, the level of 0.5%, the US dollar index will jump up very rapidly towards higher levels. If there is no change or in line with the expectations, 0.25 will be left as it is right now, then of course we shouldn't be that much keen for another up move, because that might be a very steady move to the upside, not generally that dynamic and fast as most of the market participants would like to see it. So that's the US dollar index. Of course, the other pair reacting to the FOMC meeting is euro dollar. Euro dollar, as you can see, is hovering very close to the recent bottom, to the recent swing low, around the level of 1186. It's now closed in a tight range, 1.1237, 1.1373. It's been basically bouncing up and down in that range for almost last 2 weeks, and it's all because of the interest rate decision of a Fed today, because any kind of as I said, unexpected decision like a rate hike would mean a sell off of the euro dollar way lower, below 1.1167, 1.1153, because that would mean the monetary policy is being tightened. So now let's say to the upside, the spike up, the up rally, the uptrend is right now eventually a bounce. Not that trend now is limited to 1.1373, 1.1422 and 1.1501, which is the key technical resistance in the midterm. To the downside, of course, we got the lows of the 24th of the November, 1.1118. We got technical support 1.1153, 1.1167, and of course we got another levels down there, but those levels are way below the current price action, because we need to move our chart towards the year of the 2020, and the next eventual target would be 1.1018. So that's the targets for the euro dollar. Let's take a look at the euro to Japanese yen. Dollar to Japanese yen, of course. US dollar to Japanese yen is another kind of a pair that might be very heavily affected by the FOMC interest rate decision. Well, it all depends on what that decision will be. As you can see right now, according to the Elliott wave scenario, we are developing wave B, or just made a high for the wave B at the level of 113.96. There is still wave C to the downside missing, so please keep an eye on this current pattern ahead of the interest rate decision, because if there will be a unexpected hike, then of course US dollar will be ripping higher. Then this scenario will be invalidated, and most likely US dollar will break above the high of the wave 5 at 115.52 and go way higher. On the other hand, if there is no change, or the decision is in line with the expectations, we should see developing wave C to the downside in the coming days on the US dollar to the Japanese yen. The targets are 112.25 and 111.71, which is a very good level to complete the wave C of the overall correction. It might be just the first wave of the correction, of course. It doesn't have to be the whole correction, but this would be kind of a good level to complete the correction and they resume the move to the upside, because as you can see from a broader perspective, if we take a look at the whole 2021, we just broke above the 2018 high, and as you can see, we are just going higher and higher after the post-COVID, of course, bounce from March 2020. So the US dollar to Japanese yen is still in the uptrend. And last but not least, let's take a look at gold. Maybe just before we will take a look at the Bitcoin, let's take a look at gold, because gold might react to the FOMC interest rate decision as well. What do we have here? We have a still very interesting situation, technical situation, where gold is testing the orange trend line, which is short-term trend line. The gold is still below the key technical resistance, $1,808, $1,801, and it's still above the key technical support, $1,760. Of course, because of this consolidation, our test of the blue line, which is a mid-term trend line, is being postponed. But in case of an interest rate hike, or maybe some hawkish tones from the Fed officials, we should see some sort of the down move on the gold, especially below 1,760. If this level is violated, next target is 1,741, and then ultimately 1,720. The swing lows are at the level of 1,684. This market looks weak. This market looks very susceptible to some sort of the bearish activity, bearish pressure. So please keep an eye on gold as well. Last but not least, as I said, we are going to take a look at Bitcoin. Will Bitcoin react to the FOMC interest rate decision? Well, it shouldn't react too much. However, if there will be some sort of a complete disappointment or complete surprise, we might even see the risk flows spill towards the cryptocurrencies and spill towards the Bitcoin as well. But from the technical point of view, Bitcoin is still below the short-term trend line, which is again the blue line, and below the immediate trend line, with the high at the 68,447. So as long as it trades below these trend lines, the bears are still in charge despite the extremely oversold market conditions. So what we need to do in order to resume the uptrend, we need to first break above 53,228, which is the key short-term technical resistance, and then break above $60,000. So maybe today, after the FOMC interest rate decision, situation will be much more clearer. Maybe will be, maybe not. We will see. We have to wait until 9 p.m. for the FOMC to give us the decision regarding the interest rates. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Bye bye.